Quarterly conference calls with financial analysts allow CEOs to inform their shareholders about the company's financial prospects. But while a lot of research has focused on how CEOs speak about business-related topics in these calls, how do statements that go beyond financial information affect market participants and stock price? By examining archival data related to how CEOs spoke about COVID-19 in conference calls early in the pandemic, researchers found that the more human care statements CEOs made, the better their companies fared on the stock market as stock prices tumbled globally. Conference calls are highly anticipated by market participants as they help define how a company has performed in its latest quarter and project growth in the coming quarter, things that directly affect stock prices. Typically, these calls revolve around companies' production and profit margins, not human elements. But researchers found that about 50% of CEOs made human-related statements in conference calls during the COVID pandemic, such as statements that expressed concern for the safety of their employees or the welfare of their customers. How did market participants react to such statements? Surprisingly, though these statements were mostly generic and vague expressions of care, the number of statements CEOs made was positively associated with stock returns during the market collapse. Showing a bit of humanity was associated with lower stock volatility, suggesting investors saw such stocks as less risky and worth more. Wonder how companies fare when their CEOs show humanity in earnings calls? If so, you may want to read this paper.